Hello. The messages in this video are for informational purposes only and do not constitute investment advice. While every effort has been made to provide accurate information, we cannot guarantee the completeness or the timeliness of the information contained in the upcoming video. This video is for entertainment purposes only. In addition, all investing and trading in the securities market involves risk. Any decision to place any trade in any financial market is a personal decision that should only be made after thorough research, including a personal risk and financial assessment and the engagement of professional assistance to the extent that you believe necessary. I was watching The Spy again, and not to beat my own drum again, but like I said, I've been watching this since Tuesday, and this is Tuesday's candle. So right before we've gotten a MACD signal, we've gotten two parabolic SAR signals. And now it looks like, I don't want to split hairs, we're not quite crossed, the 4 and the 8 SMA. And you have the 20 SMA sitting way down here at 458 and a half. But like I said, it was a choppy day. I was watching the 461 puts. And one thing that Alan and I talked about Tuesday was options and setting targets and max losses. So if you can trade options and continually or consistently limit your losses to 30 or 50%, and 50% seems like a lot, but then look for doubles and triples on the upside of it, you're doing well. Now I was watching, like I said, the 461 puts, and I don't know if it's going to keep my drawings there. It doesn't look like it. Oh, it does. So in the morning, I got in at $60. We retraced back up to the 5-minute low, and I added at 45, which put my price at 51 or 53. 50% of that is around 30-ish. And while we breached it once, we ended the day above that max loss. Looking at this daily chart, and Dennis and I, or more so Dennis than I, will kind of go into more of the indices on where we're looking. But I see this chart, and I'm bearish tomorrow as well. So with that said, I would have, had I bought these, I think I would have held them and carried them into Friday. Now it's quite risky. One, they're out of the money by 2.5 points. And two, they expire tomorrow. So if we don't drop at the open, they're going to lose quite a bit of money. The better way to play that is to basically just cut your losses and then play the 5-minute rule Friday morning. I think I saw a post from Alan saying that he thinks we're going to start up and sell off. And we've seen that before with Google last Friday. So Thursday, Wednesday, Tuesday, Monday. Last Friday, we traded up and then sold off as well. And if you recall, I posted looking at Google puts towards the 9 a.m. or 10 a.m. Eastern reversal. So look for that again tomorrow. Tomorrow is the 12th, and then Monday is the 15th. So my personal opinion is that we sell off tomorrow, and then Monday we go bullish. So with that said, I'm going to turn it over to Dennis. I'm going to let him talk about the indices, let him talk about some commodities, the dollar, interest rates, that sort of thing, and let him do his thing, because he's much better at reading macro macro indicators than I am. So with that said, Dennis.
Okay. Share my screen here. All right. Well, I don't trade options at all for my clients whatsoever, but I'd like to go over some of the indices that we have. And the first one I want to start with is gold. And a lot of people say gold's been running up. I got to get into it. But let's take a look at gold on a daily chart. I like to use the symbol IAU for gold.
Well, and they say that gold is kind of your inflation hedge. And I think Wednesday kind of shocked the market. I think it shocked everyone on just how bad that CPI reading was. You know, and now I think the Fed has kind of backed off of their transitional indication of inflation. So we'll see where that goes. But yeah, as inflation rises, or the threat of inflation rises, I think people move into gold. And the new thing is Bitcoin, the gold substitute. So and I think that's what we're seeing here, is this rise. But is that top blue line, is that the Bollinger Bands?
That is the Bollinger Band. We're really extended on that trade. So I think we can stay short gold for this point in time.
Yeah, definitely. It does look quite high.
So that's why I put that there. You know, I'm thinking that gold will continue to correct here a little bit. You know, maybe we get down to 1800, 1830. I don't know. So that's what I'm kind of thinking. So, you know, I was short yesterday on gold, you know, with GLD and IAU, and I just think that's really extended at this point. So we'll see. Next one I wanted to talk about is our famous government bonds. And looking at that, I was short government bonds with TBT yesterday, but I think that trade's run its course as well. And I think short term that bonds, you know, actually go up a little bit, you know, bring it down. And so if you look at your daily chart here, let's take a look at that. It's all fair. And it's still somewhat bearish here, but I think we'll move off of that a little bit, go back up.
TBT is the short of government bonds?
This TBT is a short, yes.
Okay. And TLT is the long.
Or you want to look at UBT, which is the 2X.
UBT.
Yep.
2X. And I'm taking notes because I still am working on my ETF spreadsheet. So
So if you look at a 240-minute chart, which is every 4 hours, you can see we get an up arrow here. Your parabolic SARs are positive. Your 4-day has crossed above the 8-day, and it's moving across above its 13. So, oh, that's on the TB. That's the short. Well, I'll show you on the other one. And here's your 60-minute chart on TBT. Let's see what it did at the end of the day. There you go.
okay.
Okay.
And remember, TBT is the inverse of bonds. So as it goes down, bonds are going up.
That's right. Yep. So I would think that bonds may go up a little bit tomorrow. We'll have to see. Okay. And then I wanted to talk about SPY, SPY. Same thing.
Up 0.11%. So like I said, you know, pretty choppy, non-eventful day.
But I'm looking at the, you know, the last hour or so on these charts. You look at the 30-minute, do I go long? Do I go short for tomorrow? And it doesn't look too healthy here on a 30-minute chart.
Yeah. Well, and especially I think the last I think that selling was accelerated in the last 15 minutes or so.
Mm-hmm. Mm-hmm. So yeah, I usually look at it at 2 o'clock, say, what's going on here, you know?
Well, and you know, in the end of the day, it kind of signals the opening in the next day, you know, and that could
Correct.
change. You know, things could happen overnight, but for the most part, yeah.
Mhm. So you can see here, just like you were showing here, that, you know, you get 2 parabolic stars there, and your 4 days drop below the 4, and it should start to drop below its 13-day moving average, and then we got the 20 down here at 458. So wouldn't it be nice if we got down to the 20-day moving average there? That would be sweet. We shall see. And as you can see, we have a print of a wave 3 on top. So we'll hopefully get tomorrow wave 4 print, and then our final wave up. So
Those are Elliott waves.
yes, those are Elliott waves. Yep. You get a print here, but I still think we go lower. And then your stochastics is turned, you know, still bearish. Okay. Let's talk about the Qs. Now, I like this industry. It's very, very strong. But what do you see here the last hour? There's no point in doing it.
Look at all that red.
I don't even have to look at it.
Well, and I think the Qs were the ones that, out of the 4 indices, the SPY, the Qs, the IWMs, and the Dow, I think the Qs were the ones that were taking the most heat, or the ones that were beat up the most.
Mm-hmm. And then the next one we go to, I think the strongest one, as I said last week, is the Russell. And IWM we're looking for. Where did that one go? There it is, number 200. Same thing, this rolled over this afternoon too, the last hour. So, yeah, there's no emphasis there. You know, I usually like to look at, you know, what the kind of things are doing at the end of the day, and that the charts on the right are all bullish and they're green. Well, seriously, take a look at going along the next day. But I was kind of soured on doing that thought today. I said, stay where you're at.
Yeah, there's no need to push things or to.
Nope. So look at your 30-minute chart at the end of the day. If it doesn't look bullish, don't do it. And then we got the Dow Jones Industrial Average, the DIA. Where did you go? There, it's way down the bottom, 235. All even numbers today. Again, the same picture here. You can see the 8, the 13, the 21 are all bearish, the same thing.
Right.
In a short-term chart, there's no point in even going to a daily chart, but I can. And that one looks a little bit worse. It's already dropped below the 13. So, and you can see the money flow here too, that we were way overvalued over here. Let's see, we're pumping red there. So I was kind of prepared for this drop we had yet, you know, last 2 days. Some of the things that I like that are bullish, that's what I want to start. We need to make money. I am bullish on a couple of things here. DBA, agriculture. And I kind of like this chart. You know, you're above your 4-day, you're above your 13-day moving average, you're above the 20. Let this thing run.
Yeah.
So, and even if you look here, the last hour or so, it was still bullish. So you might get a little bit of pullback, but I do think your agricultural products will be going up. You can look at a few others here, like wheat. I'll pull that up on a 240-minute chart. You know, subparts of DBA. And you can see that's bullish here. And then we have corn. I don't think corn looked as well, but soybeans did. And I have that here. There is corn. That one's not so bullish there. Okay. Then you get soybeans. There's another one that I think is pretty bullish. So I like that as a trade. The other one I kind of like too is oil, which is your natural gas. I think natural gas may pop back up in the next 2 weeks, especially. But we'll see what happens.
Yeah, and I think wasn't Boyle the 2x, or I mean it's leverage, right?
It is leverage. It's a 2x.
Yeah, Boyle and it's pair cold, KOLD.
Mm-hmm. KOLD. Yep. So there's a good chance it may go up a little bit more. Here's your 30-minute chart at the end of the day. So kind of like that one's a bullish trade. Yep. And then for tomorrow, I was looking at EFZ, which is bearish on the European stocks. You got on this one, if you want to write it down, you got EFA and EFZ. EFA and EFZ is a pair. Okay. So, you know, those are the two things that I'm thinking is bullish tomorrow. You look at oil and your agriculture. Otherwise, I think we have a little bit of a drop. Not as bad as Tuesday and Wednesday were. You know, so that was your wave 3. We did a wave 4 hopefully today. And then we get a wave 5 going down tomorrow. So
Okay.
that's my thought on that. Well, the rest of the segment and presentation, I'd like to talk about our model portfolios at PVG. And one of my favorite models that a lot of people like, you don't have to diversify too much. It's called our dynamic core portfolio. And this model simply just invests in the S&P 500. And when we're bullish on the market, you'll see 100% invested in 3 S&P 500 exchange traded funds. So you can see we have 25% in VU, 25% in IVV, and 50% in SPY. Okay. And then when we go market neutral, you'll have 25% in VU, 25% in IVV, and 50% in SPY. So we're at a neutrality approach, and basically the portfolio is parked. So what that does to you when we're having a downturn in the market, go back to 2008. Brian, what do you see the S&P being at the end of the year here?
Wow, negative 37. So
Yep.
yeah, so these
And
kind of mutes those extreme.
our portfolio for the year was only down 5.16%. Not bad. But never in this portfolio for what, over 13 years, 20 years, have we ever had a double-digit loss. And there's been many opportunities, especially in 2018. There was 2 of those. You had like 30% drop in 1 year.
Right.
So,
Yeah.
you know, our goal is to keep what you have. It's too hard to make it up when you have a loss. Okay. So it's a very simple portfolio just to invest in the S&P 500. And then the second portfolio I wanted to talk about is total tactical return model. And this particular model is a little bit more diverse, but much the same. And you can see we only put 30% into SPY, 20% into the Qs, 20% into EFA, and 20% into IWM, and then 10% in individual stocks. When we go market neutral, you're only going to have 15% in SPY and 15% in SH. So we are hedged equally and ready for a correction. A lot of people say, well, that doesn't make any sense. Why don't you just put your money in cash and be done with it? But do you see the issue with that? Or just go 100% short if you know market's going down? What do you see the problem with it, Brian?
Well, nobody really knows when the market's going down. It's you can't really time the market. You need to be in it to make up for inflation and things like that. But you got to be balanced and kind of adjust those balances as the market dictates.
Mm-hmm. See, the problem with going just short, you think the market's going down for the next 2 weeks, is, you know, that the volume is extremely light and they can push this market around any which way you can. And you could lose a lot of money by going naked short. So by playing the market neutrality approach, you can go 50% short and 50% long. And then add into your long positions. So this before it was the same thing. We were only down 5.38 2008. And even in 2018, we talked about that, we were down 1.2%. I remember that year when we were down over 30% at Christmas time. Crazy.
Right, yeah.
So that's a little bit about PBG and who I represent. And if you're looking for defensive portfolios, this is the place to be.
Right, exactly, yeah.
So
Sounds good.
with that said, I'm pretty good, you know. And I think you're onto something, because I was just watching another video here, and they were saying that usually this is planned the last couple of weeks of November, the market seasonality usually goes up.
Okay.
So it's just not a one-off thing. We'll hope and see if they're right. We'll have to see. So, well, thanks for listening, and we'll talk to you soon.
Okay, sounds good. Thank you, Dennis.
Yep, bye.
Till next time.